Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago. Bring you some commentary here in the energy markets on Wednesday, February 26th. So let's get started. Crude prices right now, we're a little bit firmer. We're up about 80 cents. It's been mostly a firmer session here so far. We're trading around 102.63, so poking up around that 103 area. Brent, a touch firmer. We're up about 2 cents right now at around 109.53. So really, we're continuing to see that spread kind of narrow here a little bit. I think we're stabilizing, though, around this 750 area. So got some ideas on how to play that spread. Natural gas here, the April contract, taking a look at that, it's off about 3%, down about 14 cents at around 455. As I mentioned in a lot of these recent posts, ton of volatility in that market. There's a couple different ways that you can play that. So if you're interested, give me a call. Complex is also a little bit firmer. RBOB's up about a penny and a half. Heat a touch firmer, but only up just over a little bit of a quarter. So not too much action there. Really, most of the session here has been a touch firmer in the oil market. S&P was a little bit firmer earlier today, and that's kind of pulled back. But the recent price action this week certainly has been a little bit firmer. We did get out the EIA data earlier today. Traders were looking for another build, but they were looking for a build between about 1 to 1.5 million barrels, and it came in a little disappointing, but still nonetheless a build of about 60,000 barrels. So putting total stockpiles right now at around 362.4 million barrels, which is just underneath the highest levels that we've had for this time of year, coming in around 377.5 million barrels. So, we're still running, I think, with ample supplies in that market. The one thing that I think is interesting to note here is you look at over about the last 5 weeks, obviously we've seen crude prices really rallying much higher here. We've been up here a little over $11 here. Personally, I think that the market is very overbought at these levels, and I think that, market is starting to lose some of that momentum here. But what's interesting to note is, if you take a look at the capacity utilization levels here, for the last 5 weeks here, they've been running much higher than year-ago levels. For example, we saw capacity utilization coming in around 88% versus this time last year at around 85.10%. So, I think that has been what traders have been watching here. But I think the big thing is that even though capacity utilization has been running higher than year-ago levels here for the last 5 consecutive weeks, when you look at the overall stockpiles, it really hasn't put much of a dent in the overall stockpiles here. Still running with, I think, the stockpiles still at a very significant level. So, you look at yesterday's price action in the oil here, and I think that's something traders should certainly take a look at here. Prices yesterday, obviously, were selling off here, and we actually hit a 5-day low. The only thing that concerned me there a little bit is, although we hit that low here, and certainly on the charts here, to me, the pattern started to look a little bit bearish, but that came on the heels of lower than normal or lower than average trading volume. So you bears out there, we're kind of losing a little bit of conviction, it appears. But nonetheless here, market coming up a little bit, mostly has been in an inside day today. I still think the market's losing momentum. I still think there's a great opportunity coming soon to play oil here to the downside. Give me a call. Shoot me an email. I'll talk to you about a bear put ratio spread and how you can potentially take advantage of that market here. Good luck and good trading.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.